All right, today we will look at foreign exchange. Today's lecture is basically a recap of what you would have done in accounting 2 and 3. We will look at uncovered transactions, and that is where we would import an asset or inventory or an item from overseas. And because the cost price is denominated in a foreign currency, we have to convert that foreign currency amount to rands. All right, so we import goods from overseas, so we call that a foreign exchange transaction. All right, so when these goods are imported, we must always look at what the transaction date will be, because we will use the transaction date to recognize the transaction in our books. All right, remember this is an imported asset or an item. So it's denominated in a foreign currency, and because we report our financial statements in rands, we have to convert it into rands. All right, so we convert the foreign currency amount to rands, and we must always look when the risks and rewards are transferred, and that is linked to the transaction date. So when you have a FOB transaction, when the goods are free on board, so the seller is free of any risks when the goods are on board the ship. So when you see a date where there's a FOB included, then that is the date that the risks and rewards will be transferred. So normally we would have an order date, there would be an invoice date, there might be a shipping date or FOB date, then there's a delivery date. So all those different dates could be used as a possible transaction date to convert from the foreign currency to rands, but we must look at when the risks and rewards are transferred. So FOB date is when the goods are on board the ship and the seller is free of any risks. So we will use that date. All right, the spot rate, that's a term we use for the exchange rate on a specific date. So normally all transactions will be included in the books at the spot rate. All right, so there's a screenshot of Ohanda, a currency converter that you can use. So on the 22nd of January 2016, the exchange rate from the dollar to the rand was 16.68. At the moment, the rand is about 14.17, somewhere there. So this is the exchange rate. All right, so we have a euro rate, a dollar rate, a pound rate, and any currency in the world can be converted from that foreign currency to rands. And we will give you the exchange rate on a different dates, but you can use it as the spot rate. All right, so in terms of spot rates and currencies, this is a fluctuating rate. So every day there's a change in the rate. When there's a significant event that happens, last year we had the beginning of the pandemic, then the rand devalued towards other currencies, so we had to pay more for imported goods, so the exchange rate increased. It recovered now, it was 16 last year as well. You can see that things happen, that there's an improvement again in the exchange rate. So that all depends on world markets and on events that happen, and that will influence our cost for any imported goods. And the opposite is also applicable here. If we export and the exchange rate goes higher, the rand against the dollar is higher, then we will get more money in for our goods that we export. If the exchange rate comes down, then you would also get less money for any goods that we export. All right, so it's a balancing act between the exchange rate and what we import and what we export. All right, so first time we account for a transaction, we exchange it at the rate on the date of that transaction. All right, so we import the goods, we have the transaction date, and we say that dollar amount, and we multiply it with the rand exchange rate. So the difference between the paid rate or the paid rand amount and the original transaction amount will either be a foreign exchange profit or loss. So if the rate increased from the original transaction date, then we would have to pay more because the dollar amount stays the same and the exchange rate is now higher. So we have to pay more. So that means we will have a foreign exchange loss. If the exchange rate comes down, it was 16 to the dollar. Now it's 14 to the dollar. So because we have to pay at a lower exchange rate, we will make a foreign exchange profit because we owe less money. So when we have a year end, on year end, any foreign amount outstanding on year end must be converted at the spot rate on the year end closing date. So we must use the spot rate, the closing rate on year end, and convert any foreign currency that we still have as outstanding. That is just to reflect in the financial statements what is the value of any foreign money that we owe or debtors that we might be receivable from overseas at the spot rate on year end. So we will convert any foreign currency that we still owe. So if you have, for instance, a transaction, we import something for $1,000 in the middle of the year, we pay $500 before year end, how much is left on year end? We still owe then $500 on year end. So that $500 is then converted at the spot rate on year end to calculate what we still owe in rand terms on year end. So any foreign exchange differences will be included in the statement of profit and loss and other comprehensive income. So when we restate this restatement on year end, we will calculate a foreign exchange profit and loss because we calculate basically what the value of our foreign currency converted at the spot rate on year end should be in rand terms. And then we compare that with what we have in the books already. And if we owe less, the rate decreased, then we will have a foreign exchange profit. If we owe more, then we adjust what we have in the books and we will have a foreign exchange loss. All right, so if we have this, there's a timeline, transaction date, we use the spot rate. Then we have to restate anything that we still owe on year end at the spot rate. And then when we make a payment after year end, we will use the spot rate again. So if there is a payment after year end, after we've restated, again, we compare what we pay against what was there on year end. If we pay more, it's a foreign exchange loss because the rate would have increased. If we pay less, it would be a foreign exchange profit and the rate would have decreased. Right, so we have an example, very basic example. It's an uncovered transaction. Covered transactions we will do later. So an uncovered transaction means there's no forward exchange contract. So there's no hedging that we do against any foreign currency that we owe. All right, so this is easy. We have a transaction for $1,000. So we import something from overseas. On the spot, on the transaction date, the spot rate is 7 Rand to the dollar. And the year-end spot rate is given as 6 Rand to the dollar. So if you look at those two rates, the rate on year-end is lower than the rate at the transaction date. So that means if we owe anything on year-end, or if we pay something after the transaction date, we will pay less because the rate is lower. So that means there will be a foreign exchange profit. Right, then they say payment date before year end, they give us the spot rate of 6 Rand 50. So you can already see that the payment date rate is lower than the actual transaction date. So that means we will have to make a foreign exchange profit before year end. And we make a payment of half of the transaction amount. So we pay $500 before year end. So that means on year end, how much is left? We still owe $500 on year end. Transaction amount was $1,000. We pay $500 before year end. So on year end, there is still $500 left. And that $500 must then be restated at the rate on year end. And now we must look at the T accounts for these transactions. All right, so if we look at this, we will buy an asset. We will have a foreign creditor. Then there will be a bank amount because we made a payment, and because we have to restate it on year end, we would have a foreign exchange profit or loss. All right, so an asset is more on the debit side, less on the credit side. A creditor is more on the credit side, less on the debit side. Bank, more, less. Foreign exchange profit. So profits is always on the credit side, and a loss will be on the debit side. All right. So what do? Make this a little bit smaller. All right. So we have $1,000, and they set the transaction rate on the transaction date was 7 Rand to the dollar. So we have to convert it at that rate. If we go back to the example, the transaction date rate was 7. All right, so we have to say $1,000 times 7, and that gives us the transaction amount of 7,000. So we debit the asset on the transaction date, 7,000, because our assets will be more, and we credit the foreign creditor with 7,000. And now we have accounted for the transaction that we need to include in the books. All right, so what happens next? Now we have a payment. The payment is $500, and the rate for the payment was 6.50 Rand. If we look there, payment date before year end, the spot rate is given as $1 is 6.50 Rand. So remember, your Rand amount must always be more, because $1 is equal to 6.50 Rand. So we multiply $500 times 6.50 Rand, and that gives us 3,250. All right, so that, I made a mistake. I didn't close that, sorry. So that is our payment amount. All right, so remember, if we make a payment, the payment must always go through the bank. So the bank will be less. So we make a payment, 3,250. And because the payment is towards the creditor must also be less. So we make the payment in the creditor, 3,250. All right, so now we have the year end. On year end, we must say how much do we owe. All right, so how much do we owe on year end? On year end, we still owe $500 because the original amount was $1,000 less the payment of 500, and that gives us what we still owe on year end. All right, so the 500 on year end must be converted at the spot rate on year end. So that was given as 6 Rand, and that will give us 3,000. So what is the 3,000? The 3,000 is year end spot. We restate the creditor or any amount that we still owe to the creditor. All right. So now what does this mean? That 3,000 is the 3,000 is the value. Oh goodness, I can't write today. That is the value of the creditor on year end. What it should be. So that's the value that it should be. It is not an adjustment. This is what we should have shown for the creditor on year end, 3,000 Rand that we still owe on year end. All right. So if we look at the creditor, we had a transaction amount of 7,000 less 3,250. And now we must have a balance at the year end of 3,000. So if we balance this account, and this is now just basic accounting, debit side is the highest. So our total should be 7,000. Our balance brought forward and the balance carried forward should be the 3,000, because we need to show the year-end balance for this creditor as 3,000. So that 3,000 is our balance of the creditor on year end. So if we now want to calculate the foreign exchange profit and loss, we must look at what do we need to adjust the creditor with to get the balance to 3,000. So if we had 7,000 transaction amount, less the payment of 3,250, less the balance of 3,000, then we still are short 750 Rand. So that 750 will be our foreign exchange profit. And why is it a profit? It is a profit because the rate decreased from the transaction date to the payment to the year end. Because the transaction date, the rate was 7. When we made the payment, it was 6.50 Rand. And on year end, the rate is still lower and it is 6. So there's a decrease in the rate from each of the transactions. So that means we will owe less and we have to make a foreign exchange profit. All right, so this 750 is just your balancing figure to balance the creditor. So you can basically go and say, we will have 7,000 transaction. Transaction less the payment of 3,250. And that gives you 3,750. The balance that is left after the first payment. on year end, we must have a balance of 3,000, and that is restated balance by using the foreign currency we owe on year end, converted to rands at the spot on year end. All right, so if the balance is 3750, how much do we need to make it less with to get it to 3,000? So we have to decrease it with 750. Because we decrease the creditor, we have to debit the creditor. And then the other side of it will be a credit the foreign exchange profit. All right, so that is this example. So that 750 credit is a foreign exchange profit. Then we have class example 2. Class example 2 is with a few extra amounts and transactions in it, but this is still basically the same as what we just did. All right, so the transaction amount is $3,500. We ordered it on the 10th of April. It was shipped on the 15th of April. It was invoiced on the 30th of April, and we made a payment on the 15th of July. And the year end is 30 June. All right, so what do we need to do here? We first need to determine what is the transaction date. So when we order something, it doesn't mean the risks and rewards are transferred. It was shipped FOB on 15th April and invoiced on the 30th of April. So when we read shipped FOB, that means all the risks and rewards were transferred to the seller when the goods were on board the ship. So the 15th of April, the 685 rate will be our transaction date. The payment is only after year end. So that means we didn't pay anything before year end. So on year end, we still owe everything. So we must restate the $3,500 that we still owe at the spot rate on year end date. So the year end spot rate is 690. So we will restate $3,500 at the year end spot rate. So if you look at the rates, the transaction rate is 685. The year end rate is 690. So there's an increase in the rate. Because there's an increase in the rate, there must be a foreign exchange loss. And then from year end to the payment date, there is also an increase in the rate. So we will make another foreign exchange loss in the next financial year when we make the final payment. Apologies. Out. All right, so we have $3,500 as the transaction amount. We said the transaction date is the 15th of April, and on that date, the rate was 685. So we can convert our foreign currency to rands $3,500 times the 685, and that gives us 23,975. There was no payment up to the year end, so on year end we still owe $3,500. So what we owe on year end, we have to restate at the spot rate on year end. So on year end, the spot rate is R6.90. Right, R6.90 on the 30th of June. So we restate it, and that gives us an amount of 24,150. All right, so we owe more. So that means it will be a foreign exchange loss. All right, it was 23,975. On year end, we should show the creditor at 24,150. Remember, the 23,975 is already there. So what is the adjustment we need to do? So we need to calculate the difference between what it should be on year end less that 23,975 original amount. Remember, sometimes there is a payment in between the transaction date and the year end. So then you can't just say transaction amount less the year end amount. Then we just need to see what the difference is after the first payment and the balance that we had. So this difference that we now have is 175. So it's a foreign exchange loss. All right, because we have to say credit the creditor with 175 and debit foreign exchange loss with 175. So if we look at the T account, we will have the asset or inventory or whatever we purchased, 23,975, and we will have a creditor that increased of 23,975. All right, that's the transaction amount. There's no payment before year end. So now we have to restate our creditor on year end. The creditor should be 24,150. So we have to get a balance there of 24,150. And because the rate increased, it will be a foreign exchange loss. So we have to say foreign exchange loss, and that difference now is 175. So that's a foreign exchange loss, 175 credit to the creditor. The creditor should be more. So 23,975 original amount plus the 175 adjustment that we now make gives us the balance of the creditor of 24,150. And then we say debit the foreign exchange loss, 175. All right, so that is up to year end. We've had the transaction at the spot rate. We restated the foreign currency that we still owe on year end. And now what do we need to do? Now we have a payment after year end. So after year end, we make a payment, $3,500 times 705 because that was the rate that was given on the 15th of July. That is on the payment date, and that payment then will be 24,675, and that is the bank amount. Because what you have to do is you have to go to the bank on the date of the payment, the 15th of July, and say, I need $3,500 to make a payment to my foreign creditor. So when you have to go to the bank to ask them for that money, they will say, for each dollar that you buy from me, you need to pay me R7.05. So out of your bank will go an amount of 24,675. All right, because it's a asset account, bank is part of assets. Assets are more on the debit side, so we have to credit the bank with 24,675. All right, and now what happens to my creditor? My creditor currently is 24,150. So all I need to do is make the creditor 0 because I've made a payment now. So I can just say bank 24,150 because now I just clear out my creditor, and now the creditor will be 0. All right, but what's the difference? Debits must be equal to our credits. All right, so we've got a credit of 23,675. 24,675. That is the payment to the bank. But our debit creditor is only 24,150. So we have to make another debit, and that debit will be, our foreign exchange loss, and that loss is 525. And now all my debits and credits are equal. So basically what it means is I paid 24,675. My creditor was 23,975. Oh, sorry, that's a mistake. That's the original amount. The creditor was on year end 24,150, and because I don't adjust the creditor on that payment date, I just make it 0. I deduct it from the payment, and that will give me foreign exchange loss of 525. So I paid more of the year end because the rate of the year end is higher. All right, so that is the two examples that we have here. All right, so the next example is uncovered transactions, example 1. So quickly open this. That is in the handout. So